Hey traders, just gonna do a quick. I'm gonna highlight silver. This option play we did. So we got this option seminar that's coming up this Saturday. I'll go over some more details about it this at the end of the video. But I want to show you this is the power of the type of strategy that I have, along with the model that we have. And it doesn't matter if you're playing the intermediate term. It doesn't matter if you're playing the long term. The call ratio spreads I use. It's one of the best strategies that's out there, and nobody really teaches on it. I don't think very many traders even know how to trade it. It's a simple spread, but it's just, I don't know why nobody uses it. I think it's because nobody's ever really trades it. Everyone sticks to the simple things they know. But anyway, I'll show you the power of why I like it, and that's what we go over on Saturday. So silver Wheaton, this is a play that I have in the preferred portfolio product. So that's geared towards the longer term trades or investments, okay? And these are our core long-term wealth building trades. And so not only do I do analysis on global macro in that product on where we like being positioned, whether it's, long the dollar, long short long the dollar, long deflation, long growth slowing, which means long bonds or anything that looks like bonds, utilities, high dividends, short financials, short late cycle consumer stocks, short, we were short some of the more cyclical names, or short energy, and being long metals, being short retail as consumers late cycle. All that type of stuff is in the preferred portfolio product, and that's the longer term, how I am positioned long term, and also how, if you're running a long short hedge fund, if you're a portfolio manager, an advisor, a hedge fund, sell side trader trading your PA account, that's how I like being positioned in the long term. So that's a preferred portfolio. But this has been one of our biggest winners in that product, and this has been a play that we took off the majority of our size over the last, I guess we sold into beginning of August. But now I'm trading it around selling calls, so I'm going to go over that in the options seminar also. So when I look at a market or a particular stock or investment, okay, I look at top-down approach, I call it, my top-down directional analysis. So this is the monthly level. I don't know if you can see that. I guess it's over here, monthly. So this is silver Wheaton. It's kind of a derivative play on the spot price of the silver. And these guys are the largest silver streaming company in the world. They have an awesome business model, but it's very leveraged to the price of silver. I'm not going to get into it. You can learn about it at their site. But what I want to highlight here is the monthly cycle from 08 to 09. I keep trying to highlight this for you guys in the video, but I want you to keep an eye on the slow stochastic number. Okay, that's the %D. It's the slower moving line. That's going to keep you out of trouble. And I keep saying that sometimes when this faster line is rising, you may see it like it's opened up, pointing high within the cycle, but really the slower line is still midway or just slightly past midway. Point being that it's kind of in the middle of the cycle. So if you keep an eye on the %D reading, it's going to keep you out of trouble. All right. But what I want to highlight here is in 09 at the bottom, this reading got really low, below 10, or maybe not quite below 10, right at it, 10.67. All right. And then we got this bullish candle right off the low, and that started the bull market. Now, what's typical when you get a nice strong uptrend, and you can see this green line is the 8. The price held this 8 all the way up. Okay, called that the 8 train. When that happens, you're going to tend to get the cycle to kind of ribbon or stay high within the cycle. It'll cycle, but it'll never really move back to the bottom ranges. But that's okay. That's part of being in a bull market. That's how you trade the weekly, and you can stay in this trend by several methods in our model I teach. But the point being is now we kind of did the same thing here. We got below 10 this time, 9.5 on the cycle. And this has been the first move up, first wave up, and it's been a nice move. So we didn't catch the first move up, but we caught the secondary pullback. And now no doubt we're high, very high within the cycle. So we could easily pull back. I suspect that the pullback, though, is probably only going to go about halfway of this move up. So we'll see where the cycle leaves us when we're at those levels. It may be kind of a scenario where we see more of this, if this is really going to be a strong bull market into the highs from last year or from 2011. But I want you to see here on the weekly, so this is top down. Top, start from the higher time frame, move down to the lower. This is the weekly. I was highlighting the support down here. But the TMS changed right here. So this was in a clear downtrend. You can see the wave structure making lower highs. Started to make lower highs at or near the 30-day. Made a lower high right there. As soon as that was taken out, 15.5. Alright, this was a really strong move. This was a move to new lower lows with no real follow through. This is very strong bullish action. It's one of the largest candles in the most recent move. And then once you got above 15.5, that changed the trend to a new higher highs. So this first pullback, this is a buy setup in the model where here's you have a swing run. You could track the lower lows and the lower highs. So within the context of this pullback, tracking the lower highs, as soon as that lower high of the previous day is taken out, that was your buy signal. That's where we entered long. And then we traded it around, but this was where we exited the majority of our piece with the top of the cycle across right here. Okay, so that was a secondary dip that got us in. Okay, and that trade went for 212.5%, and I rolled these calls today. So I just put 4,800 to work on that, on that one piece. All right, so doubled our money there on that. That's the power of this strategy. All right, and then lately I've been selling calls against that. So now that we're high within the range, you lighten up on your core position, and you can start to sell calls and generate more income around your core, and we wait for the deeper pullback. So we sold some calls in here last week. We sold them out 1 week, expired, or sold them early in the week last week, right? We sold out a week to Friday. So those expired today. And we sold them here. When it dropped, I took half off because it was like literally 1 day after we sold or something that I took them. All right, and then here we let those expire. So now I have the option of reselling the calls. If we bounce, I'm going to resell those same calls. If we dip, I'm going to get more long in my actual core position. That's what I'm highlighting in these gray shaded areas. Those are 2 spots to start accumulating here, which I did get a little bit longer today when I rolled out. I think I rolled out to December. Here's another buy spot, and then here. So these are the 3 places where you're going to work your position. You don't just buy blindly on the way down. You have to work your position right, so you keep your average cost close to the market. But to keep things simple, I have a 1,000 share position with my delta right now. Here I'd like it to be 2 to 2,500. Here I'll get my size for 10,000 shares or so. And what would normally be, I don't know, 10,000 shares at 16 bucks, it's 160 grand. Playing the call ratio strategy, I can put that on for probably 5 times that amount, less. All right, 5,000 maybe. 10,000 probably. So I would love a pullback to these levels. I don't think we'll even get close to that. We'll probably, if anything, get back down to this area. So that's another benefit of the strategy is I'm not tying up my capital in long-term positions that just eat up the buying power in your account. I structure the call ratio so that, one, when I'm selling the calls against my longs, I limit my downside, but I also take care of the time value decay by selling some calls. So if the positions move sideways over time, I'm not just losing my time value. I have the short calls that are eroding also to offset my time erosion, most of it on my long calls. And then I always have all the upside, which is nice about the back ratio strategy, is limited downside, and in theory it's infinite upside if the stock could go to infinity, which we know that's not the case. But that's the game plan, guys. So just on those short calls that we've been trading around, I mean, last week, we made 100% on those, obviously, minus the commission. But $200, we just sold 3 calls. I mean, I'd much rather take $200 in free cash flow or passive income a week versus going and getting leveraged long real estate after expenses, after maintenance, after all the renters' headaches that, some small investors, they cash flow $200 a month, and that's great. That's real passive income. But if you could do that on a weekly basis with more control and more liquidity, that's the better way to go. So that's what I teach in this option seminar. Alright guys, so that's pretty much that. Let's stay tuned here. I think the way to play it now is you always want to give yourself options, not to make a play on the actual derivatives, but let me take these off so you can see this more clearly. From here, right, we sold calls, we lightened up on our long, we want a pullback to rebuy, get our size back on, to make some more money on the next move up. From here, we covered our calls. I didn't resell any calls. You probably could have, but to me, it just wasn't enough juice. So I either want a dip from here to buy more, actually bring up my delta, get more long contracts further out, and then I'll sell some out of the money calls, or maybe even a few at the money. Okay, just to take advantage of some time decay out to Friday. Right, so if that's the dip, that's the plan. If we go sideways, maybe I'll sell a few calls just because I don't want to just go sideways and earn nothing. Or we bounce, then I get to really resell some fatter premium, and that's what I'd like to do before Friday. So that's my plan. I want to bounce. I'm going to sell more calls. Hopefully we can dip, actually, where I'd rather get more long and then buy more calls and sell some covered calls against it. So stay tuned on that, guys. And if you want more info, check out the site. Again, the new site's up. I think everything's pretty much working as we like it. We probably need to still make some changes, but you can sign up for the options webinar. I go over all these 3 main parts in the model, so it's kind of a 2-for-1. Then I go over the option plays. These are some of the returns that we generated on a swing and long-term basis. And, you can read all about this here. Here's the price. So I'm going to do 4 weekly follow-up Q&A sessions, which is open to the whole group. And then, like I said, you get free 6 months of the active trader membership, which is about $900 value. So that in itself, I mean, I remember I paid 12 grand to learn to trade Forex in a 2-day seminar. No, I didn't have anybody walking me through trades over the next 6 months. It was just, that was it. And that was a fun foundation for a lot of the money that we made in treasuries and Forex was all from something like that. So I remember I paid 12 grand just for a 2-weekend seminar. So this is $900. I brought the price down to 2 grand. And the next one's here on the 27th. So there you can sign up there, guys. Look forward to going over some more trades like this, and we'll pay attention to this silver move. I bought some futures there also on this dip. So that's one of the spots we like really being long-term silver and gold for a lot of reasons. But anyway, guys, enjoy your night. We'll talk to you in the morning.